Andrew, HSAs. Uh, how has the HSA policy changed under the One Big Beautiful Bill Act? And what exactly health? That's what health savings account HSAs.
Health savings account. Yeah. So the things most people need to be aware of is now there's broader exposure to what we call eligible plans. That was the hardest thing with HSA is some plans were not considered a high deductible plan, so you couldn't even use an HSA, or they were not HSA eligible plans. So now some of your bronze plans, catastrophic plans are covered. But the biggest thing people need to be aware of are also what is now deemed a qualified medical expense. So what can be taken out of HSA tax free to pay for things like gym memberships, even spa treatments, anything like that that is used basically for your health as a physician regulated piece, you can use out of your HSA. But again, it is very black and white what you can and can't use. And if a physician necessitates it, but like I've had clients say, oh, I'm going to put a pool in my backyard because swimming's good for my health and my stress level. And it's like, yeah, you can't really write off your pool or use your HSA to pay for it. But those are the biggest things. And then the other thing that's going to be real common for a lot of folks, especially with children, if they have a flex savings account, the FSA dependent care contribution amount has been increased as well to 7,500, which is going to be a big win for a lot of people. I'd probably say majority of my clients use a FSA, a flex spending account, over an HSA.
Okay. So with these new HSA policies, new write-offs, me personally, I've never considered an HSA. It's to me, I was just like, yeah, well, I have all these other things. Is it really something I need? So with you as an advisor with these new provisions, would you encourage your clients, myself included, to start opening HSAs and treat it more as a long-term investment vehicle rather than just simply a reimbursement tool?
Yeah, I think there's some advantages to it. It's hard to predict what the future is going to look like, but
Right.
there are pretty much two certainties in life. One, the older you get, the more you're going to need healthcare related things. It's like a high mileage vehicle. You put 110,000 miles on a car, you know something's going to break. It's just mechanics. Our bodies are the same way. So medical expenses generally as we get older go up. That's where having an HSA, especially for a 20, 30-year-old, where they can build it and invest that money and potentially use it 20, 30, 40, 50 years from now could be a huge advantage. The other standpoint, too, is a lot of people, if they are able to control their healthcare expenses, so, they go to the doctor for a physical, they go to the eye doctor once a year, dentist twice a year, those healthy people, again, still can use a high deductible plan, put a ton of money in an HSA for the tax benefits, and they may not even need that money. So it can definitely be a big asset in the future as well.
Do you typically see employers offering HSAs as a benefit? And if not, do you think more employers will now because of these other changes and advantages? It's like, hey, the labor market's the labor market, and there's always more incentives to be had for workers, typically. So do you think HSAs could be one of those tools that an employer can take out of their tool belt?
I hope so. Where I've seen employers use it, and especially when I was doing a lot of work in the business and employer health space, was, an employer like in the state of North Carolina is required at a minimum to pay 50% of an employee's health insurance premium. They can pay 100% if they want to. There's very few businesses that still do that. However, one thing that a lot of business owners took advantage of with the advice of good health insurance professionals was, hey, give your clients, give your employees the option of doing plan A, B, or C with the idea of, okay, plan A is your normal PPO, copay plan with no deductibles or very low deductibles. But if you want this, you're going to have to pay $600 a month. On the opposite end, you have a high deductible plan that costs the employee nothing. And the employer is saying, hey, I'm going to put $150 a month in a HSA for you. So in giving that benefit to the employee to pick and choose what the right type of health plan for them is a benefit, it could also be very cost saving for the employer as well. Whereas prior, a lot of employers kind of felt like they had to have these very rich Cadillac PPO type plans. They were getting 10, 15% premium increases every single year, and they're getting cash strapped, right? I mean, it's a big benefit to provide health insurance for employees. So I hope it's going to be used more. I definitely think more and more of the Gen Zs and the younger folks below the millennials are utilizing HSAs more. I see more of them, they get out of college and they already know what a health savings account is versus, there's folks our age, Brad, they're like, what's an HSA and why do I need it? And so a lot of people, again, have been used to that old PPO model, the copay model, whereas the younger generations realize like health insurance is expensive and my deductible is
Yeah.
$20,000 before health insurance even kicks in. So I need to put some money away.
So do
Yeah.
you help clients a lot with that, Andrew? With the do they come to you a lot with like, hey, should I get this health insurance plan or this health insurance plan?
I do. Yeah. I generally, I offer that. And of course, I want to take clients up on that when they're, looking at their renewals, when they have their open enrollment, or if it's a new job. So again, comparing, because that's a big thing too. Like someone might say, hey, I might take this job. It's a 10% pay increase. But if their health insurance plan is really expensive and they need the health insurance, it's like, okay, well, actually, you got a 3% pay increase. So,
Yeah.
those are definitely areas I look at for people because they need to know. And then even the life changes. I've helped a lot of clients where, one spouse goes on a high deductible plan with an HSA, the other spouse has them and their children on a plan that's fully paid for, and their net out of pocket, is plus $300 to them. So there's
Yeah.
definitely some ways you can strategize if it's a dual income family, a single income family, self-employed. Again, what they need to be doing. Is it private insurance? Is it, high deductible plans? So yeah, there's definitely a lot of planning, and I'm not the health insurance guru, so I get the information from the gurus, and
So
then
one thing that I did, I now it was probably 10 years ago, but I've been on a health savings account for a while, high deductible plan with the health savings account, trying to max it out and not touch the money so it can grow tax free and I can take it out tax free. The only triple threat, right? You can put it in tax free, it can grow tax free, you can take it out tax free as long as you follow all the rules. So one of the most
mhm.
amazing accounts you can have. But one of the things I found out when I ran the numbers on my own plan a couple years ago, again, family of five, was the difference in the premium between the high deductible plan and the no deductible plan was $6,000 a year. And the
Mhm.
amount that I could put into an HSA was like $6,500 a year. And my high deductible plan was $2,000 per person up to three people of $6,000 a year. So I was sitting there thinking, I was like, so I could either give the extra 6,000 as a premium to Blue Cross and it's gone, or I could go on the cheaper plan, put the 6,000 into the HSA, and if I have a horrible medical year, I spend the 6,000 on my deductible and it's a wash, or we stay healthy and the $6,000. So I don't know if you've seen that or if you've run it in that way, but I haven't done it in years. But the difference in premiums was basically what my potential out of pocket was. And I just thought, why guarantee paying this to the health insurance company when I could put it in my health savings account and maybe have to pay it, maybe get to keep it.
Yeah, that's
So
the
it,
other empowering part too. It's huge. I tell people that too. I'm like, if you pay 700 a month for a health insurance premium and don't go to a doctor, the insurance company's not going to give you money back.
yeah,
You're basically it's pooled money. You're paying for other people's care. Whereas at least with the HSA, and Brad, I did the same thing, and I still use an HSA. We still use an HSA. For that exact same reason, because I'm like, at least I get some control over that money. And to your point, I'm like, I mean, I had one year, years ago, I had over 10,000. I mean, I hit my out of pocket and my high deductible. Knock
mm,
on wood, that never happens again. But luckily, I had the money there to pay for it. And I was able to do so tax free. Even though it did clean me out, I was like, that's why that money was there. So it all worked out. And had I paid for a higher insurance plan, it would have been the same net effect, hopefully. But I probably would have still had some out of pocket, et cetera.
yeah. That's where it seemed like a no risk solution for me because it's like worst case, I end up paying the same amount I would have paid anyway on the better plan.
Yeah, exactly. That's true.